For the majority of this year, I've been mainly buying just one ETF for my long-term investing portfolio. Sounds crazy, right? Conventional wisdom is to diversify your money across at least a few different funds. But let me explain why I'm doing this and why this could also potentially be a pretty good idea for a lot of investors as well. Let's get to it. So, what initially steered me towards this new idea or this new direction? Well, I realized that one of the problems that many investors face is that they tend to overcomplicate investing. And I went through this exact thing as well. First, I tried to pick stocks. So this was mainly happening around 2020, 2021 when I just started my investing journey. I would go and do my research, figure out which stocks would, hopefully perform the best and then go and buy that stock. So I would tell myself that this is for the long term, right? I'm investing for years. I'm going to hold this company. That's why I was doing research about their revenue growth and potential over the next 5-10 years. But most of the times, the reality is I would just dump these stocks after 6 months. Maybe the longest stock that I've ever held is maybe 1 year. Then I thought, okay, this is a bit hard. It's not working out too well. Maybe instead of picking individual stocks, I will then invest into thematic ETFs. So thematic ETFs are things like an ETF that focuses on a specific sector or specific theme, right? That's what it's called, thematic ETFs. So I thought, okay, I still get to express, what sectors I'm bullish on without having to pick what exact stock I want to invest my money in. I'm bullish on the whole sector, not just a specific stock. So I thought, this could be easier for me. So I went on this journey where I invested into fintech ETFs, e-commerce ETFs, healthcare ETFs, a lot of these other random sectors. And again, I just never really was able to hold long term. The thing is, 1 second, e-commerce stocks were performing extremely well. They were the hot new thing in the market. And then the next second, everything seemed to dump because, dump. Because, investors just didn't like them anymore. There was just a new sector that people wanted to rotate their money towards. And yeah, I didn't have enough conviction in any specific sector to hold it for the long term, especially when it's going through a long drawdown. So finally, I gave up on all of this and I decided that I was only going to invest into broad market ETFs. So no longer investing into specific stocks, no longer investing into thematic ETFs, just broad-based ones, like the S&P 500, for example. The thing is, again, I always changed my ideas on what I wanted to invest in. Sometimes I wanted to be heavier on, let's say, emerging markets ETF. Sometimes I thought, hey, you know what? The US is going to continue outperforming for the rest of time. So yeah, a lot of transactions were happening. I was buying, selling, couldn't decide. And it was very unnecessary, right? And there are costs related to buying and selling ETFs. But I know a lot of people go through this in their investing journey as well. And the thing is, when you're investing into specific stocks, or even thematic ETFs, I would say, it's very difficult for you to distinguish between trading and long-term investing. It was, at least for me. I would always lie to myself and tell myself that I am investing for the long term, but in reality, what I was doing was 100% trading. And at the end of the day, it just added to the amount of work I needed to do and my stress levels, and the returns weren't even great. It wasn't worth the time and effort that I had to put in. So this year, I decided to turn all of my brokerage accounts into long-term investing portfolios. There will be no more trading for me. And that means I now have quite a bit of money that I'm looking to invest into the markets. There are a few reasons I decided to do this. I do think that, trading stocks, it actually works. You can make money from it. But one of the major reasons I decided this is that I am also a full-time trader as my day job. I trade futures a lot, so I don't really follow stocks. But I wanted to focus my trading there. I didn't want to trade as my full-time job and then also trade my own long-term investing portfolio. I wanted there to be a differentiator. So I thought, okay, I will trade here, and then for my stock portfolio, it will be purely long-term investments, which is why I didn't want to trade stocks anymore. I didn't want to invest all of my cash that I used to have for trading at one go. I wanted to DCA it over, at least a few months, maybe a year max. And I figured that the easiest way for me to do this is by using Mumu's RSP feature, or the regular savings plan. It's actually really easy for me to set up. So I decided, in terms of the amount, I wanted to invest $100 every 2 weeks, which means $200 per month. And I realized that if I split this into 2 different ETFs, I will be paying too much in fees, right? Every time I invest $100, I think the fee is like $1 something, meaning in percentage terms, it's about 1% in fees, which is completely okay with me. But if I wanted to invest it into 2 different ETFs, now it's $50 here, $50 there, now I have to pay $2 plus in fees, or 2% plus, which for me was a bit too high. So I needed to decide on just one. By the way, if you guys want to have your investments on autopilot like me, you want to just DCA on a set cadence, then check out Mumu. Their RSP feature is really, really good. You can choose any US stock or ETF, determine how much you want to invest, and determine the frequency of it. You can choose, I think, weekly, daily, monthly, whatever you want. They are a regulated broker here in Malaysia, and their fees are extremely competitive as well. So if you guys want to sign up, use the link in the description of this video. You will get some nice freebies when you sign up and deposit and make your first trade. So what was that one ETF that can do it all for me, that can sort of hold up my entire investing portfolio on its own? I did my research, I thought about it, and the answer, for me at least, was VT. It's nothing new, nothing fancy. I know a lot of people already know about it. So if you guys were hoping for me to share some new secret ETF that's, crazy, then sorry, it's not that. But for me, it does the job. So for those of you guys who don't know, VT is the Vanguard Total World Stock ETF. And as the name implies, it invests into companies from all over the world, not just the US. I mean, it is so diversified that it holds nearly 10,000 different stocks. So imagine, by just investing into this one ETF, VT, you just buy VT one time, you get exposure to 10,000 different companies from all over the world. The majority of the investments are still in the US, so they have a 62% allocation towards the US, and you will still see that their top names are the big dogs, right? Names like Nvidia, Microsoft, Apple, they are all still in this ETF. But at the same time, they still have exposure to other countries like Japan, China, UK, and even Malaysia. And I'm okay with this. This is actually exactly what I'm looking for. I do want to stay invested in the US mainly because, they have been the best performing stock market in the world for over the last 10, 15 years. But at the same time, I still want that bit of diversification. So VT, I think, to me is perfect. I think the allocation 60-40 is just about right. Having said that, why not just invest into the US stock market only? An ETF like the S&P 500, VOO, that's also extremely popular, and I know a lot of people invest purely into the S&P 500. Well, if we look at historical returns, then yes, S&P 500 has outperformed VT for sure, just because it is all into US stocks. But, as normal, historical returns do not guarantee future returns. And I'm just not so sure that the US will continue to dominate over the next 10 to 15 years. We never know, but I do like that diversification that, VT gives me. I would rather be diversified across a few different countries at least, because there is the potential where I think between 2000 and 2008, the rest of the world basically outperformed the US in terms of stock market performance. So yeah, we could go back into that, right, over the next 3, 5, 10 years. Who knows? I just want to make sure that my portfolio is diversified enough to sort of handle that shift in terms of which markets will outperform. So I could do this by investing into, multiple different stocks from multiple different countries, or, I can choose different ETFs, S&P 500, emerging markets ETF, China ETF, etc. Or I could just buy VT and let it, sort it out for me. Another option I had was to, of course, invest my money into the local stock market, which is Bursa Malaysia. But honestly speaking, the growth for our stock market at least, it's just not really there. Maybe if there was some, ETF that was highly liquid, that looked at Malaysian growth stocks, then maybe I would consider it. But at this point, you have to really pick your stocks when it comes to the Malaysian stock market. And like I said, those days are over for me. I do have some investments in Malaysian stocks, of course. I still own names like Maybank, RHB. It's just not that much in comparison to my international portfolio. So I've been doing this new strategy or this new approach of investing into only one ETF over the last 6 months. And I would say that my investing has been a lot more hassle-free. It's a lot more chill for me now. It's easier for me to stick to my investing plan because now I don't have to worry about, is my portfolio allocation correct? Is the US going to continue outperforming, or is China going to recover now? I don't have to worry about all these things anymore. Also, speaking on a general basis, whenever there is a huge bear market, if you are diversified across many different countries, it tends to not be as bad compared to if you invested into, let's say, just the US and then their economy crashes. Of course, it will be a lot worse. Also, now I'm making less transactions because instead of buying 10 different ETFs, nowadays I'm just buying one. So I am saving some money on broker commissions, stamp duties, and all these other fees. I know it's not a lot of money, it's just $1 plus, 5 ringgit, but over time, this can compound as well. And with all of this being set up on Mumu's regular savings plan, I don't even have to manually invest anymore. Everything is just set on autopilot. I do have a bunch of cash in Mumu, but because they have that cash plus feature, which is a money market fund, at least that money is still earning me interest as well. So yeah, nowadays I can just focus fully on my full-time job, which is trading, try to make as much money as possible trading, and then channel those returns towards VT for the long run. I think that is the perfect approach for me. Having said all of that, I know that personal finance, I know that investing is not a one-size-fits-all kind of thing, so this approach will not work for everyone. So which ones of you would this work for? What kind of person would you be to, sort of consider this strategy? So first up, this is of course for investors who are, or who are looking at a long-term horizon. I would say at least 5 years, but better yet, if you don't need this money for 10 years plus at least, then yeah, this would be a good approach for you. But again, this is not specifically just for VT. I would say as long as you're investing into stocks, into equities, you must have a long-term horizon because stocks can go up, stocks can go down. You never know when you want to withdraw that money. If you're in a bear market, then you are kind of screwed. If you do need this money for a short term, let's say it's for a wedding, a holiday, down payment on a house, then I would recommend sticking to something that's a lot less volatile. Things like money market funds, fixed deposits even, or high yield savings account. I think these are much better options because you know that at least you cannot lose money. And I know a lot of people, especially those who have only started investing recently, they think, there's no problem putting short-term money into the stock market because the stock market only goes up, right? Well, reality check, stock markets do go down as well. If you're a new investor who has never experienced a bear market, you might think it's not a problem, but trust me, having gone through 2 bear markets now, it is very painful and it's not fun if you need that cash, if you need to sell your stocks when everything is down 30-40% just to withdraw that cash. You don't want to be in this position. Another group of people who this would be good for is for those of you guys who want some exposure to the US and also the US dollar. Even though this is a global ETF that invests into companies from all over the world, the ETF is still denominated in the US dollar. Meaning, if the Malaysian ringgit goes up or appreciates against USD, then yes, we will be losing money because at the end of the day, we spend our money in Malaysian ringgit, not USD. So that is something that you need to consider. But yeah, it is still good for us to also diversify our sort of holdings across different currencies. And then for those of you guys who are looking to invest into something for a passive stream of income, for an income source, then this will not work for you. ETFs like VT, they barely pay any dividends. And anyway, a dividend investing strategy in the US, it's not really worth it because of the withholding tax 30%. It doesn't make sense for us to invest there just for dividends. If you want dividends, if you want a passive stream of income, then again, consider things like money market funds, ASB, those are what we consider passive income investments. Even local stocks, we have a lot of big dividend players like Maybank. Those are much better options than something like VT. Finally, if you're someone who really enjoys the stock market, you like tracking stocks, you like studying fundamentals, then again, this might not be for you because this approach is extremely simple, it's extremely boring. I don't know if you can outperform the market by, picking individual stocks, but if you can do it consistently, then by all means, go for it. Abandon this approach. Just continue with your trading of stocks. The thing is, I know that most people, when it comes to investing, they don't really care about the stock market. They don't really care about, the performance of Tesla this quarter. All they want to do is invest their money, and only having to invest into one single ETF just makes their life a lot simpler. So that's where I've been investing my money for my long-term investing portfolio. It has been really good for me so far, actually. I enjoy this and I'll probably stick to this for, at least the next 6 to 12 months. Maybe I'll change my mind later on, but for now, this really works well for me. Let me know in the comments below, guys, are there any other ETFs that you guys think can be a one and done for your investing portfolio? Thanks for watching this video to the end. Give me a huge thumbs up if you enjoyed it and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.